Hello my friends, this is Skyba with JCB Wealth Management, and today I would like to introduce you to the very first episode of Fast Financial Facts. Today I would like to talk about a topic that's been on a lot of people's minds this year. This is, of course, inflation. So what is inflation? Well, using Merriam-Webster's dictionary, inflation is a continuing rise in the general price level, usually attributed to an increase in the volume of money and credit relative to available goods and services. In the most basic of terms, it's price increases due to an expansion in spending. There are multiple measures of inflation, but for our sake, we'll use the most commonly used one, which is the Consumer Price Index, or the CPI. This index measures the monthly changes in prices paid by U.S. consumers. Inflation reduces your money's purchasing power over time. For context, I'm walking around in the year 1980, enjoying the final days of disco with $100 in my wallet. Today, I would need $374.01 to equate to the purchasing power of that $100 in 1980. That's an increase of over 274% and an average of 3.19% per year. So knowing this information, the next time you hear from someone who lived in the 1950s talk about how they were able to buy a movie ticket with their pocket change, you better believe them. Luckily, there is a relationship between inflation and wage growth. So even though things cost more today, the average wage has increased as well. According to the U.S. Census Bureau, the median household income in 1980 was $21,020, while being $70,784 in 2021. That is approximately an increase of 237% to the median household income during that time period. The chart displayed is from the Federal Reserve Bank of St. Louis and illustrates a comparison between year-over-year wage growth versus inflation. The curved black line is the association between inflation and wage growth over time. This line indicates that with higher inflation, real wage growth, or the difference between wage growth and inflation, would decline. Essentially, with higher inflation, wage growth generally will not be able to accelerate at the same pace. That brings us to the present. The September 2022 CPI release from the U.S. Bureau of Labor Statistics estimates an increase to the CPI of 8.2%. We haven't seen these levels of CPI increases since 1981. With inflation levels like this, the Federal Reserve has raised the Fed funds rate to the range of 3 to 3.25% when it was at 0% earlier this year. With inflation still running red hot, we could probably expect more increases to the interest rate by the end of this year. Waiting on inflation deceleration is a major pain, but we will get through this. Financial markets in the U.S. economy will see better days soon enough. This has been Fast Financial Facts. Thanks for watching. And always remember, learning is your guide to successful decision making, and we hope to be your guide on your financial journey.